So today we're talking about how to become consistent as a trader in the market. So first things first, what does being consistent actually and truly mean? If we should go by the Oxford Dictionary, so consistent actually means, let me check that. So the Oxford Dictionary, consistent actually means being consistent. That's a bust. So let's see what consistency means. So consistency means lack of self-contradiction. That being said, so as a trader, what does consistency actually mean? It means repeatedly doing the right thing even after your last trade was a loss. So for me, if I was to define consistency in my own terms, I'll define it as following my trading plan, whether I am winning, losing, excited, or afraid of the outcome. I'm going to do it. So basically, it is me taking my emotions and putting them aside every single time I'm coming to the market. So that's what consistency actually means to me. One of the biggest shifts I advised myself as a trader when I was coming up was the fact that I didn't bother myself about the money. I know I always say this in my video. Don't focus on the money, don't focus on the money, focus on honing your craft to the T. So you focus on getting better every single day in the market. And let's say it's the end of the week, you shouldn't focus on how much did I make at the end of this week. You should focus on how many times did I execute my strategy correctly at the end of the week. Because there are some trades that you feel that okay, this trade is going to go your way, you enter and it eventually goes your way. But the problem there is that the next time you try that, it might not go out your way. It might go out a different way, and you might feel that okay, this this strategy doesn't work, let me change it. So going back to what I said, consistent means following your rules and doing what your rule tells you to do regardless of your emotions. Because believe me, you can have a losing week and still be consistent. And also in reverse, you can also have a profitable week and be inconsistent, and you're not following your rule. Because you might enter 4 random trades Monday, Tuesday, Wednesday, Thursday, Friday, and all of them are profits. Or you might follow your strategy and you have like 3 different outcomes that played your way, that went to your direction. So I'll pick the second one over the first one every single time, because the first one you're picking random trades and entering and you're making money. You feel that you can be consistent. You cannot be consistent. That depicts the whole part of the word being consistent. It is self-contradicting. So you are self-contradicting yourself. So you have to follow your plan. You have to do this. You have to try this so many times and see that okay, this is what works for me, even after I take 2 losses. Another thing that helped me is having a playbook. So now, playbook. I know you guys might be wondering what is a playbook. I always talk about journaling. So this is my playbook. This has my rules. This has my strategy. This has my journaling. Every single thing that will make me enter a trade, that will make a trade valid for me is inside this book. I always talk about journaling, and it is very good. Although there was an app my brother introduced me to, which I'll be sharing maybe in the next video or in another video. But yeah, so having a playbook is very, very, very important. Most successful traders, most profitable traders all have playbook, whether it's physical or it's digital. They all have playbook. So a playbook is, so going by the Oxford Dictionary or my handy dandy ChatGPT, a playbook is a list of rules I follow for my strategy to be valid. In every single trade, although I don't look at my playbook anymore because it's already in my head. So I know that if these 4 things aligns, then this trade is valid. But if 3 things out of the 4 align, okay, I'll say that okay, let me hold on, let me chill, let me step back and see how the market plays out. And eventually, when I step back, I see that okay, this didn't play out the way it's supposed to play out. If I was to jump, if I was to enter, if I was to just enter, I would miss out. In some cases, 4 out of 3 of this might play out correctly, and I wouldn't enter, but I'll say that it eventually goes my way. Is that a loss? That's not a loss for me because I followed my rules. I was consistent with my playbook and I was consistent with the rule. So now, how should your playbook look like? How should your journal look like? Well, to me, this is for like the people that are taking trading very seriously, that are out of the beginner stage. So your playbook should have, I think, 4 to 7 of these rules, and I feel that the last one is very important. So basically, as soon as I open your playbook or your journal or whatever it is you're writing on, whether it is physically or whether it is, excuse me, whether it is handwritten or it is being typed on your phone, I feel like when I should enter it, or when I should open the page, it should be your full strategy. If you're using a support and resistance strategy, if you're using a breakout strategy, if you're using a bounce and retest strategy, if you're using Twizzler top, Twizzler bottom, whatever strategy it is that you're using, it should be at the front line of your playbook or of your journal. And you should be seeing it every day. You should be reading it to yourself every day. You should be, even if you're not trading, like most weekends, even if you're not trading or you're not analyzing the market or you're not back testing or you're just bored, just carry the book and look at the strategy, play it, saying it to yourself, okay, break and retest, engulfing, whatever it is that is your strategy. Always say it to yourself. And even after that, you can go to the market. You can find the strategy multiple times. You can backtest the strategy to see how many times. Because as soon as you are saying it every single time, playing out in the market, you will not need to carry your book every single time you want to enter the trade. You just come to the market, okay, wait for these two confirmation, you enter the trade, and it's going your way. If it's not going your way, fine. It is what it is. So it should be that this should be the heading. Your strategy should be the heading. So number 2 is what actually determines your trend. If it's an uptrend or a downtrend, you should know as soon as you step into the market, as soon as you're finished analyzing and mapping out your zones for your strategy. So number 3 should be where you should find trades. So sometimes, okay, as for me, as my strategy is support and resistance, I can't look for a signal inside the zone and I can't look for a signal above the zone. I have to look for a signal at the breakout of the zone, whether it's a breakout or whether it's a bounce and retest at that zone. I can't be looking for signal when the move have already happened or before the move have happened. That's not following my rules. That's not following the playbook. So that's going against every single thing I've said. So number 4, I think number 4 is very important because, like I said, number 3, you can't enter when the trade is playing out inside your zone, because there are some signals, there are some plays where, okay, you've seen the play and you are seeing the play, you are seeing it playing out the way it's supposed to be, and this candlestick is breaking out of the zone and it's about to close. Maybe you trade the 15-minute time frame and it is 10 minutes in, remain 5 minutes, and you've seen that, okay, this is an engulfing, it's a bounce and retest. In 5 minute time it will close, but let me just enter now before it closes. If you enter, you're not following your rule, because anything can happen under 5 minutes. Anything can actually happen under 5 minutes. You can enter and you see that as soon as you enter, it starts to go down and it stops you out. So you're not following your rule. You have to wait for the candlestick to print out first. When it's done printing out, when it's either an engulfing or it's a reversal or it's a break and retest, it has to play out fully. You have to wait for the time frame to close. When it closes, then you can decide on whether or not to enter the trade. So another thing is why you should enter the trade. So I think this part is the easiest part, because if you are following your playbook, you should know that after the first confirmation, the second confirmation, the third confirmation, the fourth confirmation shouldn't be that difficult for you, because you are waiting for an entry. So if you are trading the 1 minute time frame and you are looking for zones on the 15-minute time frame, after you've marked out your zone on the 15-minute time frame, you go to the 1 minute time frame, you wait. The importance most traders fail to do is wait, being patient. Sometimes waiting is like 95% of what most traders do. So you have to wait for it to play out. Wait for the candlestick to print out. Like I said, it has to print out. If it's breaking out of your zone, you wait for it. You say, okay, once this has printed out, once it has closed, then yes, this is the time I should enter the trade. If you're trading 15-minute time frame and you're executing on the 1 minute time frame, always go to the 1 minute time frame to execute. Or if you're trading the 4-hour time frame and you're waiting for the 15-minute time frame to close. Always go to the 15-minute time frame to execute your trade. The last step I follow is, if there is no setup, then there is no trade. I know this is very, very hard. This is hard. There are some time where you come to the market and you see that the market is bullish and you feel that, okay, if I should enter this trade, you might know, but you can't be thinking the same way like hundreds of people are thinking, because basically the market is me and you. We are the one trading the market. It's not like a bot, or it's not AI. It is me and you. So we are sentimental. You might see a trade that you can go long. I might see a trade that I can go short, and we are seeing the same thing. So we are not deciding for millions of people. We are not deciding for millions of people. You might come to the trade and say, okay, this is a buy market. Somebody else can come to the trade and say this is a sell market. But what is very important is that if you come to the trade, you recognize it's an uptrend, you mark out your zone, and it does not give you an entry, you do not trade. So in other words, no setup, no trade. So you might see, believe me, yeah. If you go to social media, you see that trade that you didn't enter, that didn't give you any signal, you see that somebody else entered the trade and the person is making money from it. Nowadays, I have been limiting the time I spend on social media looking at influencers. Some people are even trading. Some people are even just influencers. They're not even traders. So I'm limiting the time that I spend on social media, because most times you might think that it doesn't affect your psyche, but it affects it. So stay off social media if you're trying to become a better trader. Maybe you can just be going there for to get motivated. But just try and stay off social media. Stay off influencers that post lifestyle. I know the lifestyle is good, but you have to. Some of them didn't get there in 2 years or in 3 years. You see that some people have been trading for years, for decades. Like you have the likes of Cubanks, you have likes of Lambo Raul, and most of our Nigerian traders. So some of them have been trading for years. You can't even if you can't expect to be at that level when you've been trading for like 2 months or 3 months just because you are seeing lifestyle. So don't focus on the lifestyle, just focus on bettering your crafts, focus on being consistent, focus on always going back to your playbook, even after 6 months. Or okay, like my brother just told me that the strategy he's using now was the one he was using months ago. Do you understand? And he felt that this strategy is now working very, very well for him. Although market condition change. So when the market condition changes, it's actually going in his favor. So that's the importance of writing down your strategy and always journaling. Your strategy tells you what you should trade. Then your playbook tells you exactly on how to trade it. Another point I would like to give is, first one is being consistent. I mean, that's basically what this whole video is, being consistent and having a playbook. So another one is, as a beginner trader, what I failed to recognize was always protecting your capital. Like most of us, Nigeria has been difficult in some cases, and everybody wants quick money, everybody wants money, and we feel that, okay, forex is the reigning thing now that everybody is doing, forgetting the fact that it is not easy. Like every other business, you have to go through some difficult time, and you have to invest, and there's some money that you're going to lose. Some people forget the fact that you are going to lose money. What I always preach about is protecting your capital. For the first few months, don't just trade demo accounts. Try as much as possible to get like 20 to 50 trades on that your strategy that you've backtested so many times. Try as much as possible to get those 50 trades, then see how profitable it becomes before you invest in it. So you're investing in it because you feel that, because you're investing because you've done the homework and you've seen how the strategy plays out. Even after you get like 4 or 5 winning trades, your 4 or 5 losing trades, 4 or 5 losing trades, you see that, okay, even if I should get like 2 or 3 trades, I'll be in profit. So the important thing is protecting your capital. Don't just trade because everybody are making money and you feel that once you enter the market you'll make money. Trading will humble you. It has humbled so many people. It has even humbled me. It has humbled my brother most especially. So it has humbled him. So I try as much as possible to always learn from his mistakes because he's my mentor. I try as much as possible to always learn from his mistakes, and it has helped me so far moving forward. And another thing is, I think this should be like the biggest thing is focusing on just one strategy. Whoa. Okay. Although there are plenty strategies out there are like hundreds of strategies out there. Most people learn 4 or 5 or 6 different strategies, or some people they are even swayed by the internet. When you see Lamborao is trading just zones, and your strategy is twizzler top or double bottom or double top, and you feel that okay, because it's profitable, let me leave this strategy and move to this strategy. You just want to enter the strategy without properly backtesting or without properly getting the necessary amount of trades you need to get out of that strategy before this trade is being valid. So if you have a signal, if you have a strategy, learn the strategy well. Don't copy people's strategy. That's if you have, but if you don't have, find the strategy, find the mentor that knows the strategy, then use the strategy and tweak it a little bit. Add your own finesse to it. So it's not like copy and paste. Although copy and paste is good. Some people don't even know how to trade, but they just find people that know how to trade, invest. So that's another way. You get me? That's another way. But all in all is that find a strategy, focus on one strategy, get the necessary amount of trade you want from that strategy, and follow that strategy to the T. So what I would say to end this video is that don't chase don't chase so many strategies. Focus on just that one strategy and try as much as possible to get better at just that strategy. So yeah, I think these are the 5 things. These are the rules. I think it's more than 5. I think I said so many things. These are the rules I actually followed when I was coming up, and some things I didn't follow, but now I'm wiser. I've grown. So basically, it is being consistent, actually following your strategy and not jumping on too many strategies, having a playbook, writing down your emotions. So writing down your emotions. So sometimes after entering a trade, after risking like maybe like $5 or like $6 or like $10 or $20, we start being afraid. That fear, don't put it in the trade. Write it down in your journal. So that's why I always have journal. You are writing down your emotions, how you feel before you enter the trade, how you feel while the trade is playing out, how you feel after the trade, whether it hits your stop loss or whether it hits your take profits. Write everything down. So yeah, it is being consistent, having your playbook, protecting your capital. I think that one should be after you have backtested the strategy so many times. Protect your capital, master one strategy. So these are the step-by-step guides I would follow as a beginner trader that knows nothing about trading whatsoever. These are the step-by-step guide I would follow to become consistent and to become a better trader than the rest of traders. This is what will actually make you profitable. If you should follow this rule, regardless of your emotions, I think you'll become a profitable trader. So thank you for the video. I hope to see you in the next one. Please do like, share, subscribe, and always believe in yourself. Peace.